Nothing in the world right now, ladies and gentlemen, is more valuable than the mighty gold. Gold advanced to a record high of more than $3,100 an ounce on Monday this week, capping off a blockbuster quarter of gains. Gold futures rose 20% in the first 3 months of this year, the metal's biggest quarterly gain since 1986. In 1 year alone, till date, gold prices have gone up by 18%. In 2025 alone, in the last 3 months, gold prices have risen by 32%. What is happening? And what is the future? Well, let's dive down into the reasons first. First reason is, of course, one man, Donald Trump. Investors have rushed to safe havens like gold and US treasuries in response to the uncertainty caused by President Trump's unpredictable tariff threats. Trump, over the last 2 months, has shaken investor confidence by sporadically announcing, delaying, diluting, and escalating trade wars with many of America's largest trading partners, including India. The on-again, off-again approach to tariffs has also left consumers and businesses across the world worried about the economy. Trump has designated to announce global reciprocal tariff war on countries. Tariff war, trade war, prices of goods and commodities like auto, jewelry, dairy products, pharma, oil, minerals, glass could rise further because of this confusion. This is also giving more weightage to discussions about de-dollarization. Such scenarios eventually lead to currency wars, ladies and gentlemen. Can the dollar be trusted as an international currency since the head of the US government has resorted to such measures? That's what the economists and analysts across the world are asking. Well, there's no certain answer as to which currency can replace the mighty dollar. But there is certainly world's oldest and most tangible currency. It's called gold. Investors want to hedge their money. They want to safeguard it. And the biggest hedge tool is gold. Demand for gold, therefore, has increased multiple times over the last few months since President Trump took office. Not only retail investors and corporations, but central banks across the world have been accumulating gold. In 2024, central banks across the world purchased a record 1,045 tons of gold, exceeding the 473 tons annual average between 2010 and 2021. Central banks of China, India, Turkey, Poland, Uzbekistan, and Russia have led the purchase. This has been one of the major reasons for price escalation of the yellow metal, ladies and gentlemen. Next on the list is geopolitics. This is also one big reason for the price escalation of gold. Uncertainty in the Middle East, Russia-Ukraine war, Houthi-US war has only added to the supply chain disruptions. Global economy is scared of what might happen next and where wars might just escalate. Now, uncertainty has again led investors to rely on gold, the oldest currency. The last reason, of course, is trust in gold, the world's original currency. Gold was the original currency of the world, ladies and gentlemen. In fact, global currencies earlier were valued on the back of gold reserves the country had, until Richard Nixon in 1971 delinked dollar with gold. And since then, the paper dollar has become the reserve and the most powerful currency of the world. A piece of paper, not backed by anything, but eventual trust on the US government. But times, as they say, are changing. With rising US debt ceiling, constant uncertainty in geopolitics, and countries questioning consistent devaluing of the dollar, there is an extremely strong lobby asking for replacement of the dollar as international currency. Although it's a long process, deep down, everyone trusts gold as the original currency. Will the currencies of the future be backed by gold? No one knows. But there is a consensus that gold remains indispensable. Now, what is the future in this scenario? In a recent note by Bank of America, gold prices could hit the $3,500 an ounce mark in the next 18 months. This would be a 13% escalation from the current levels given the global uncertainties and aided by investment demand. Many investors and experts tracking the market believe in that figure, while some are even predicting much more. $4,000 an ounce, maybe. But like everything else, this too is uncertain. I think in times like these, uncertainty is the only certainty. Experts believe that whatever gold assets you have, physical, bonds, or ETFs, hold on to them and wait till certainty returns in the global markets. Gold prices will be a key subject in the upcoming days, ladies and gentlemen, and we at Mint shall keep you posted. See you soon.